Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Welcome back to Talk Stocks with me, and a warm welcome to our new viewers. This is your weekly market digest where we focus on data-driven insights, cutting through the hype, fraud, and emotion that often cloud decision making. As always, we'll recap the global markets, review the NGX market internals, and wrap up by highlighting short-term trading opportunities in the US market. Let's get started. Let's begin this section with some house rules. Looking to identify whether the trend is bullish or bearish or neutral across these major markets, we have this definition key here. A bullish trend is identified when the close price is above the 20 exponential moving average, and the plus DMI is above the minus DMI, and the ADX value is greater than 20. A bearish trend is identified when the close price is less than the 20 exponential moving average, the minus DMI is above the plus DMI, and the ADX is greater than 20. We identify a neutral trend when we neither have a bullish nor bearish trend from the chart. WTD stands for week to date, YTD stands for year to date, PY stands for previous year. Having identified the definition used to arrive at the values of either bullish or bearish or neutral, let's get into where the opportunities lie this week based on the performance last week. We're not going to run through all these market indices here. We're only going to focus on where you can benefit in the short to mid term. We start by the US small cap stocks, which we track by the ETF VTWO. So meaning if you buy this ETF, you are owning the US small cap stocks, all the companies that belong into this basket. You could always search VTWO online. It's an ETF managed by Vanguard to actually look at the constituents of this ETF. Last week, they delivered negative 0.38%. Year to date, this ETF is up 7.54%. You can see versus 11.41% in the entire 2025. The daily time frame reveals a bullish trend in the short term. The weekly time frame also reveals a bullish trend in the mid term. The next asset class that can provide you an opportunity to profit in the short to mid term is the Canadian equities. Again, you can participate or invest in the Canadian markets via the ETF VCN. So this is another ETF managed by Vanguard, and it provides you exposure to the Canadian equities. This week, it delivered positive 0.39%. Year to date, this ETF is up 4.31%. From the daily time frame, we are able to establish a bullish trend in the short term. Similarly, from the weekly time frame, we are able to identify a strong bullish trend in the mid term. The next asset class or index that can provide you an opportunity to profit both in the short to mid term is the Nigerian equities. The Nigerian equities we track by the NGX ASI, which stands for the All Share Index. You can't actually purchase the index. It's just a way for us as technical experts to assess or evaluate the health of the Nigerian market. This week, the index shed 0.37%. Year to date, the index is up 6.36%. From the daily time frame, we're able to establish a strong bullish trend in the short term. Also, analysis on the weekly time frame reveals a strong bullish trend in the mid term. You can actually participate in the Nigerian equities via an ETF by Stanbic IBTC called the Stanbic IBTC ETF 30, which comprises of 30 of the most market capitalized stocks in the Nigerian stock market.
Feel free to Google it online to see what it constitutes of. And I think the index alone, I remember this week did almost 30%. But yeah, just go online and Google it and you'll see what you're looking for. The next asset class which would be evaluating or reporting is gold, which we track by the ETF GLD. Last week, week over week when I come, I give you where you can benefit in the short to mid term. If you had watched the video, found value in the analysis and bought gold, you will have been up 8.33% within the space of 5 days. Year to date, gold is up 15.57%. The daily time frame again is revealing a bullish trend in the short term. The weekly time frame is also revealing a strong bullish trend in the midterm. Another asset class that is worth reporting is silver, which you can participate in via the ETF SLV. This week it delivered, or year to date, let's just focus on the year to date, it delivered 44.23% and is showing a strong bullish trend both in the short and midterm respectively. The NGX Market Internal provides a data-driven framework to establish the breadth and strength of the Nigerian stock market, which is the ASI, the All Share Index. Remember, the ASI comprises of 144 stocks across different sectors ranging from oil and gas, banking, insurance, industrials and consumer goods, right? We want to understand, we want to pull the curtains to see what is happening under the hood. Is the engine firing efficiently, or is it rotting? Is it getting stagnant, right? Is it becoming foul? That's what we are trying to understand with the NGX Market Internals. We arrive at a rating for the market has either strong with the green circle, and that means that implies broad participation across the sectors, right? We can also have a yellow ball, and that rating signifies neutral, where we have fair participation across the sectors. We can also have a red ball, which implies weak, and that means narrow participation from the various sectors that comprise the ASI. Now, the rating for this week is a green ball, which implies strong, and we are also able to identify that the ASI is advancing and healthy. Remember, this week the ASI shared, I think, minus 0.39%. There's no point to be in fear or to panic, because the rating is still advancing and healthy. Now, how do I arrive at this rating, this whole framework? I make use of the moving average breadth, and I make use of the Winston stage analysis. Let's begin by looking at the parameters or the metrics that are important, that fall under the moving average breadth. The first KPI or score that I use or I record is the percentage of stocks within the ASI that are trading above their respective 50-day moving average. You can see that this week ended at 84% compared to 85% the prior week, which is a minus 1 percentage point change, right? So you subtract 84 from 85 and you arrive at minus 1 percentage point. The next measure that I look at is the percentage of stocks that are trading above their respective 200-day moving average, and you can see that this week it ended at 81% compared to 82% the prior week. You can see, so if you subtract 81 from 82, you arrive at minus 1 percentage point. As an examiner, I'm going to score 84% as an A. I'm also going to score 81% as an A. The next measure that is important in arriving at this market internals is the Winston stage analysis. Now, what are we looking for? We are looking for the percentage of stocks that are in an advancing stage. This week is ended at 80% compared to 83% the prior week. So if you subtract 80 from 83, it is minus 3 percentage points. 80 is also an A grade, right? So we check it A. Also, the last measure we are trying to understand is the percentage of stocks that are in a strong advancing stage, right? So from these stocks that are here, right, we want to see a final set of them. So those who are actually in a strong advancing stage. This week we had 47% compared to 42% the prior week. So that is even a 5 percentage point increase. So these are all positive metrics. So they have no point to be worried about the all share index. The market is going up. Now we also perform a sector analysis, right? We want to understand which sectors. Again, this is all based on Western framework, right? We want to see what sectors are in a strong advancing phase. We have the ASI, so you see the market is in a strong advancing phase. So this is positive. Also, the NGX 30 is in a strong advancing stage. Consumer goods sector is in a strong advancing stage. Oil and gas is in a strong advancing stage. Insurance and industrials complete the sectors that are in a strong advancing stage, right? So if you are technically savvy, if you know the sectors that are strong or advancing, you can look for the stocks that are even showing superior relative strength within the sector they belong to, or versus the all share index. Now the other classification which we've added, right? So previously we lumped advancing or declining together. Now we've separated them, right? So now the banking sector is in an advancing phase, right? So, and lastly, none of the sectors here are declining, right? So that's how we make use of this. If there's any sector that you feel I haven't covered in this analysis that you'd like me to cover, could you please drop it in the comment section, and we'll see how we can fit it into the NGX market internals. Remember, market internals helps us see beyond the index. Are many stocks and sectors participating in the move, or just a few? Looking to trade the US market this week, one way you could go about that is by identifying which sectors are hot using the forest to tree method, right? The forest will be the sectors and the trees will be the individual stocks within the forest. Now, my figure here is showing me here that within the S&P 500, right, the focus is the S&P 500, which we know comprises of different sectors ranging from energy, materials, consumer staples, technology, industrial, healthcare, and so forth, biotechnology, and so forth and so on. So one way you can go about it is by coming up with a framework to identify which sectors are showing strong short-term momentum relative to the benchmark, right? In this case, the benchmark will be the S&P 500, right? Because remember, I said these sectors are the various sectors that encompass the S&P 500. My figure here is showing me which sectors are showing superior relative strength. It's quite interesting that the technology sector isn't showing up here. That's a shocker, right? So the sectors that are showing strong short-term momentum currently are the energy sector, material sector, consumer staples, industrials, consumer discretionary, relative, and healthcare, to close the bottom two sectors that are showing strong short-term momentum, right? The darker shade of green is the 3 months to date performance. The lighter shade of green is the month to date performance. So if you have purchased the energy select sector ETF from the beginning of this month, you'll be up 10%. The energy select sector ETF is a basket of stocks that contains the stocks that belong to the energy theme within the S&P 500. Similar materials select ETF is an ETF that encompasses the stocks that belong to the material theme within the S&P 500, right? So the idea is that once you know the sectors that are showing strong relative strength compared to the S&P 500, you can use technical analysis to time your entry and manage your risk accordingly, right? So that is the first option, by trading the strong sectors. The other approach is that once you know the strong sectors, let me identify the hot stock or the strongest stocks within these hot sectors, right? It's intuitive, right? What are the strongest sectors? Can I take a trade there if I'm not someone who is very aggressive? Or now that I know the strong sectors, can I go and identify the leaders within those sectors? And to be able to arrive at that, both the sectors and even the stocks within the sectors, have created an adjusted score. This is my custom scoring technique, where I'm able to identify the hot stocks and the hot sectors, right? So you can see this is within the energy sector, right? Just focus on energy just for an example here. You can see these are the stocks within the S&P 500 that that are hot, right? You can see Schlumberger, Halliburton, TPL, BKR, XOM. You can see what they've done this month, right? You can see, so while the ETF is up 10% this month, SLB, which is Schlumberger, is up 27.86. HL Halliburton is up 19.75. TPL is up 20.88, and this is my scoring mechanism. This ranks all the stocks within the S&P 500 in descending order based on their score, right? So again, as a technical trader, I can also come up, I have my rules, right? So I'm not coming up with them. I have my own rules that I'm using to time my entry, and as always, I understand that trading involves risk, and so I position size accordingly, and I practice strong risk management, right? So I have my stop loss that I also manage. So this is how I can, or that's how I'll be going about looking for opportunities this week in the US stock market, focusing on energy sector, material sector, consumer staples, industrials, and consumer discretionary. So overall, the markets are showing a mixed picture this week, right? US large caps and Nasdaq remain neutral, while the US small caps, the Canadian equities, the Nigerian equities, and gold continue to show bullish momentum. Commodities like oil and Bitcoin are consolidating, highlighting selective opportunities rather than broad market moves. The key takeaway is for you to focus on strong markets and sectors while staying cautious in neutral or weakening trends. Remember, it's all about data, not hype. Stay sharp, and we'll see you next week. If you found this video helpful, drop a like, hit subscribe, and share with your friends. Take care. Bye.